Okay, guys, so good evening to everybody. A warm welcome on behalf of Discovery Health and Merchant Capital to tonight's webinar. We are extremely honored to be co-hosting this with the Discovery Health team, and it really gives us a great privilege to be able to talk about Well Capital, which is the product that has been launched by Merchant Capital. My name is Goodman. I am the Chief Executive of Merchant Capital, and I will be hosting tonight's webinar. Just some very quick housekeeping. The webinar is 1 hour, so we'll be ending at 8 o'clock sharp. The plan is to go through an agenda, which I'll talk to in a minute, and then really to try and leave at least 20 minutes at the end for Q&A. We believe that will be the fundamental takeout of this webinar. And if you will all just please post your questions in your Q&A box, and we will make sure to get to all of them, and hopefully we can get your questions answered in a systematic way. So it gives me a great pleasure to introduce my fellow panelists. I'll start with Dr. Ryan Noach. So he's the Chief Executive of Discovery Health, and it's great to have Ryan on the panel tonight, and he's joined by Maurice Goodman, who is the Chief Medical Officer of Discovery Health. And Maurice has been instrumental on the discovery side in facilitating the product Well by Merchant Capital. And then Daniel Moritz, who is the CFO of Merchant Capital and my co-founder. Dan has been instrumental on the Merchant Capital side in building out the credit, the pricing, and the product really that we're very excited to talk to tonight. So guys, it's great to have you on board tonight, and we look forward to a very exciting and engaging conversation. So just to talk to the agenda very quickly, Dr. Ryan Noach will give a very brief introduction on Discovery Health. That will be followed by Dr. Maurice Goodman, who will give some healthcare insights, which I think will be extremely interesting being in part of this COVID pandemic. I'll then very quickly talk about Merchant Capital and the genesis of Well by Merchant Capital and how we started the product. And then probably most importantly, Daniel will take us through the product, the process, some screenshots, some how to apply pricing, etc. And we think that will generate a fair amount of questions that we hope to get to. And as I say, we'll have an interactive discussion at the end where the subject experts can respond. If we don't get to everything tonight, we are more than happy to host another webinar in a couple of weeks to try and facilitate people that weren't been able to make it, or some product refinements that we hope to have, or enhancements that we hope to have in the next couple of weeks. So without further ado, Dr. Ryan Noach, let me hand over to you to give a brief introduction.
Thanks very much, Dorf, and what a pleasure it is to be here this evening. Let me start by just welcoming everybody that's come online to join us on this panel. This has been a time of intense webinars, one after another, and many different forums to participate in. And so we know that there may be some webinar fatigue. So we hope very much through this discussion to be addressing a subject matter that's of real relevance to you, and really makes good use of your time. Let me start by just saying a huge big thank you to all the healthcare professionals who are working on the front line. For without doubt and without question, the heroes globally and in South Africa of this pandemic. And I must say, as a clinician, not working in the clinical space, but as a South African qualified doctor, it's been a very proud period of time for all of us to see how well the South African healthcare professionals have responded to the COVID challenge that we're facing, and to see how brilliantly our clinical outcomes have fared with very good data, comparable and better than many developed healthcare economies around the world. Great testament to the quality of care that you've delivered and to the way that our healthcare system has functioned. And I should make the point that it's not only the outcomes in the private sector, our public sector outcomes have in the main also been excellent through this period. So we really have something to be proud of as a country. I think this alliance between Merchant Capital and Discovery Health is a fortuitous one, one that has come together by way of chance in the end, but has got real purpose and meaning. And I thought, by way of introduction, it would be useful just to tell you the story of what led to this alliance. Before lockdown even began, in the 2 weeks prior to the 26th of March, from when the state of disaster was declared, but prior to the lockdown, we became concerned at Discovery Health about the impact of COVID on medical practices. Our first area of concern was actually dental practices, where we became highly aware that the dentists really couldn't practice safely. And very soon thereafter, the South African Dental Association, in fact, released a notice to practitioners to say that, they should cease practice at a very early stage in COVID. And so we created a task team led in her absence by Professor Roseanne Harris in our team, an actuarial scientist, professor, and the future president of the World Actuarial Society, the current designate president. And we developed a team who, through analytics and data, were working to try and come up with models to use the scheme strength, Discovery Health Medical Scheme strength, to try and find a way to fund doctors and dentists through this period during which they couldn't earn their usual income. Long story short, after multiple applications to the Council for Medical Schemes, various engagements with the National Department of Health, and also contact with the Minister of Health directly, every attempt we made through the medical scheme to fund doctors' practices unusually through this period was thwarted, on the basis of the Medical Schemes Act being very clear that the primary obligation of schemes is towards members. And unfortunately, the regulator's interpretation of that really prohibited the scheme from making any investments to support practitioners beyond rewarding them for the unusual care that they gave during the period, which we did a lot of. No advance of funds could be created. So that led Discovery Health to many discussions with banks, our own bank at Discovery, various other commercial banks with big lending portfolios, various other credit institutions to try and source funding for doctors. That was remarkably unsuccessful. And in the few events where we did manage to, broker some arrangement with banks, what we found working with the doctors was that the administrative process and the personal sureties and commitments that doctors had to enter into in order to secure credit and finance cash flow from these banks was onerous beyond words. And actually, in all the cases that I was personally involved in, made it not worth trying. So that really led us to coming up with, again, working with Discovery Health Medical Scheme, a series of value-based proposals, working with professional societies to try and find a way where we could achieve, through value-based contracting, buying future outcomes and protecting the scheme from utilization increases. These are structures, alternate reimbursement structures, that are well defined around the world, that are common in medical insurance products, not yet in South Africa to a large extent, although we've been working with hospitals on that basis for some years, but not that much with healthcare professionals. Through months of negotiation, we did manage to conclude such an arrangement with radiologists. And with the radiologists, this value-based contract is now in place on a voluntary opt-in basis. And we're very pleased at Discovery Health to be offering some arrangement that supports radiologists with their short-term cash flow, with the quid pro quo being some protection for the scheme against utilization hikes later in 2021. And so the scheme benefits, it meets the regulatory compliance requirements, and the radiologists benefit through the short-term cash flow. We had detailed discussions with the surgeons, some with the pediatricians as well, through their various societies, although none of those have materialized to date. And as we were going through this process of looking for a partner, we eventually came across Merchant Capital, who in fact is a partner of Discovery Insures, our insurance business, and realized that their product provided a really innovative and unique approach to helping finance doctors. Very administratively simple, very affordable for unsecured credit. So as unsecured credit goes, the interest rates that are being offered are amazing. and particularly amazing if you consider that the term of these loans is effectively open-ended and linked to the revenue of the practice. And so if the repayments are delayed because the practice's revenue doesn't increase meaningfully in the short term, the loan doesn't get more expensive. Actually, the loan cost remains very stable, and the annual amortized cost actually decreases over time. And I'm sure Dov and Daniel are going to demonstrate that to you tonight. So our role in this is very important to understand. Discovery Health's role is purely as a facilitator. We have no vested interest, we carry no risk, we're not invested in the product at all. Our only role is to facilitate a relationship and an introduction between Merchant Capital and doctors. We get no fees whatsoever, no money changes hands with Discovery Health, and with the doctor's permission, on a specific consented basis, we will share relevant data with Merchant Capital to support the doctor's arrangement with Merchant Capital, as and when the doctor instructs us to do so, but in no other situation whatsoever. So that's very important. We are arm's length from this arrangement and really functioning only as a facilitator. It is very important to the healthcare system and to us that doctors get through this very difficult period and that they remain liquid and that their practices remain sustainable. I must say, just stepping back and reflecting, I had my annual pulmonology assessment with my pulmonologist this afternoon. I see her once a year. She looks after my asthma. I'm a chronic asthma patient. We were reflecting on burnout, some of the symptoms of which I think I'm personally showing now and recognizing in myself and the signs. And we were reflecting on how difficult this period has been for doctors in general, especially those doctors that are at higher risk of developing severe manifestations of COVID-19. That's really interrupted their practices dramatically. Maurice, my colleague, who's going to talk shortly, is going to share some very interesting data with you about how practices have been affected. And you'll see quite clearly that practices have been materially impacted by reductions in revenue. So my very last point before I hand back to you, Dov, is just to say we're all worried about a second wave at the moment. Just to quickly share with you an insight from our data is that we have seen a tick up in the attack rates in the Western Cape, particularly, some in the Eastern Cape. The attack rates over the last 3 weeks have been stable at about 1 to 1.5. And over the last 10 days, the attack rate has ticked up to 2.9 in the Western Cape and 2.7 in the Eastern Cape. And that's in Discovery Health's data, which, is very, very reliable data. And, because we're integrated directly to the pathology labs, we often know a patient is positive before they've even been told. And so it is worrying. There seems to be little reason why South Africa would be immune from a second wave relative to the rest of the world, where we see second waves almost everywhere else. We do have higher seroprevalence rates than the rest of the world by the looks of it, with the studies coming back in congested, living residential areas at 30 to 40% versus 10% and below in the European context. And that may bode well for us, notwithstanding which it does look like there is a slow second wave emerging now. So I do wish you all the very best for that. We must stand together as we did through the first wave. We want to support you however we can. This is but one of the mechanisms which we are facilitating to do so. Please do make use of this mechanism, which together with Merchant Capital, we've worked hard on developing and we think is truly a fantastic offering. Thank you to the Merchant Capital team, and thank you in her absence to Roseanne Harris from our team, who's done a lot of the work here. And back to you then, Dov.
Thank you, Ron. That was very insightful. If you or your pulmonologist have any medical gems on how to deal with burnout, maybe post it on the chat, because I'm sure there will be a lot of people here who are feeling the same. But thank you for sharing your personal story as well as some of the discovery data, which is cutting edge. So Dr. Maurice, can we move over to you? I know we're going to share some slides. So we'll just bring that up while you're getting ready to chat, but we'll give you around 15 minutes odd to talk through some of your insights.
Great. Thanks, Dov, and thanks, Ryan, and good evening, colleagues. And just to echo Ryan's sentiments of our applause and our thankfulness for our excellent medical care that you and your colleagues, both in the private and public sector, have delivered. We're in awe every day, and some of my personal friends in active clinical practice, we share anecdotes on a daily or weekly basis, and really the physical, mental, Ryan talks about burnout, but the physical, mental, and now financial stress that you are all under, really, we, as Ryan said, we do applaud you for the excellent care you've delivered under those circumstances. Ryan talked about our data that alerted us very early in the pandemic to the financial challenges, in fact, that the private sector, the various practices would be experiencing. And I'd just like to share 4 or 5 slides with you of that data, which I'll go through quite quickly, and then very happy in the question and answer time to do a deeper dive into that if necessary. So if we can have a view of the next slide, please. So really, this is all data, discovery data, based on our claims experience, and I'll talk you through some of the headlines of that. So if you look at the top part of this slide, that's looking at the admission rates to hospital and comparing that on a year-on-year basis. In other words, January 2020 compared to January 2019, February to February, etc. And so if you look at the top part of the slide, in the pre-COVID period, you'll see a very slight decrease in the admission rate compared to the early parts of 2019. And again, in the question time, if there's interest, we can go into that. But then if you move along the timeline, moving into the state of disaster and then very precipitously into level 5 of the lockdown, you see admission rates to hospital more than halving. In fact, a 53% drop in admission rate is indicated by the pale blue bar, and that's equally shared between the surgical admissions in dark blue and the medical admissions in the gold bar. And as we move through level 4, 3, 2, and level 1, we do see admission rates recovering somewhat. As it says on the slide, this data is up to the 8th of October, looking at data that came in at the beginning of the week, so taking us almost up to date. That's further reduced to about 20% decrease in admission rates. Interestingly, the surgical admission rates have recovered somewhat more rapidly than the medical. And again, if there's any interest in that, we can dive into that in the question time. If you look down to the bottom part of the slide, whereas the first, the top part looked at admission rate, this is looking at overall claims coming into discovery. And if you look at January and February of 2020, you'll see an increase in claims compared to the similar period in 2019. And that's a very typical pattern. You see claims going up by about 2 or 3% above CPI. And that's the reason why globally, Frank, but certainly in South Africa, medical premiums go up by 2 or 3 percentage points above CPI. That if doctors and professional and hospital tariffs go up, say at CPI, due to the utilization increases both on the supply side and the demand side, we see about a 2 or 3 percentage increase above CPI of claims costs. But then moving into March and then April, when the level 5 lockdown bit, again, there you can see a significant drop, a 40% drop in claims, all professional and hospital claims coming into discovery. Again, recovering through the various phases of the lockdown, and in fact reversing for the first time in the early part of October. And in fact, just bringing that up to date as of yesterday or a day or so ago, that reversal has gone from a positive of 0.4% to a positive of 0.9%, and that's quite a significant increase. So what we see, with the exception of GPs, which I'll talk to in a bit more detail, and perhaps pediatricians, we are seeing quite a rapid return now to a normal claims pattern, and in fact a reversal of some of those as we move now into the latter part of the year. If we can go to the next slide, please. So if we then look more granularly at what's driving those claims patterns, so on the left-hand side of the slide, you can see certain practice types have in fact increased year to date over this period. Leading that is pathology costs, and again, obviously that's mainly driven by the COVID testing that's been happening, and also pharmacy costs increasing, again driven by COVID, and also, as I'll talk to, perhaps the pre-stocking up of some chronic scripts with patients living with chronic illnesses, claiming their chronic medication to make sure that they did have sufficient medication to see them through the lockdown period. So those have been two of the biggest increases of claims costs. Also, we see radiotherapy, nursing, and psychology going up. Again, we can talk about the reasons for that in the question and answer period. But I think more to the point of tonight's session, we see the biggest decreases in claims costs. And just to mention that the length or the size of the bar is a rand measure. And so you might see some of the longer bars with relatively shorter percentages. That's because the bars are looking at the rands, whereas the little numbers at the bottom are the actual percentage change. So we see orthopedic surgeons year to date claims decreasing by 11%, anaesthetists by 12%. GPs, as I mentioned, the hardest hit, with a year-to-date 24% decrease in claims. Radiologists down by 15%, and private hospitals down by 16%. If we can look at the next slide. We then look at a few other of the key practice areas. As I mentioned, GPs down by 24%, physicians down by about 3%, pediatricians down similarly above 20%, about 22%. Cardiologists also a similar order of magnitude. Surgeons down by about 12%. Psychologists, interestingly enough, have shown an increase in claims patterns. Again, we can talk about that. And the psychiatric colleagues, although year to date being down by just over 4%, if we look at the last few months, in fact, the psychiatry billing patterns and claims coming into the scheme have in fact also reversed and are now positive. So if we look in the next slide, which interrogates the GP claiming pattern a bit more in detail. Just to orientate you, if we start on this is now looking at general practitioner consults, which is obviously the major driver of claims in the GP environment. So if you look at the far left hand of the slide, looking at overall GP consults, so you can see at the state of disaster, the start of the pandemic, a sharp increase in GP consults. Obviously, patients being very concerned that they may have been infected and rushing to their GP rooms for face-to-face consults. But then very quickly, during the lockdown period, with both restrictions placed on movement, but also patients and their doctors becoming very concerned about the dangers of obviously sitting in a crowded waiting room, where if you didn't have COVID going in, you were almost certainly to have COVID coming out, catching it from one of the other patients in the waiting room. And doctors obviously similarly being very concerned about contracting COVID from their patients. You'll recall, of course, the early days of the pandemic, great shortages of PPE, a lack of knowledge of exactly how to protect oneself from COVID, etc. So that drove a a great concern amongst doctors and patients, and so a precipitous drop in face-to-face consultations in the GP environment. If you look at the far right-hand side of the slide, though to a large extent that was replaced by so-called virtual consults, both telephone consults and video consults, and that's a trend which seems to be persisting even as hopefully, well, Ryan talked about, we're not through this pandemic yet, but as over the past month or so the numbers have come down, nevertheless the concern persists, as well as the benefits, quite frankly, of consults, virtual consults and teleconsults come through. So we've seen an increase in those. If you look at the two bar graphs in the middle part of the slide, we became very concerned, as I'll show you in the last slide, with the build-up of the kind of non-COVID morbidity and mortality with patients living with chronic illnesses. Sorry, if we can still go back to that last slide, and I'm just going to have a sip of water whilst we do that. Sorry, I hope the swallowing sounds didn't come through on the webinar. But we put in place, we became very concerned that patients living with chronic illnesses would in fact defer and miss their consults and miss their checkups with their GPs and their other practitioners. And that obviously would bode very badly for a build-up of chronic illness. And so we put in place a number of initiatives encouraging GPs, in fact, to proactively reach out virtually to their chronic patients to check on them, make sure they were compliant with their medication and that they were, in fact, taking the necessary preventive and cautionary steps. And so what you do see in the chronic and the diabetic consults is a return to normal and then a reversal, in fact, of those chronic consults. So then if we can move to the last slide, please, just to share with you some of those concerns. If we start at the bottom of the slide and you see the trends in mammography and in pap smears, we see a significant drop in members, obviously in the relevant risk groups, a significant drop in those members going for preventative or screening mammograms and pap smears. And I've just shown you two examples. If we look across the whole range of screening tests, we're seeing a very similar trend. And what that's driving, if you look to the top part of the slide, a very worrying picture where we look at new patients registering on our various oncology benefits. You can see quite a significant drop off in that. Well, an optimist might say, well, perhaps that shows that there's fewer cancer patients. We know, of course, that that's not true. With the aging population, with poor lifestyle choices, we see year on year significant increase in oncology and non-communicable diseases. And so we know what this is leading to, unfortunately, is a bit of a pent-up demand that in the medium term, in the next few months and years, we are unfortunately going to see an increase in those oncology cases coming through, and unfortunately, those are going to present later in the course of their disease with the attendant increase in morbidity and mortality. But those are problems that we'll have to collegially and collaboratively deal with again going forward. So I think I'm going to end there. Hopefully those stats do tee up the reason, as Ryan said, that we've desperately been searching for innovative solutions to help you through these financial challenges. And we're hugely excited by the product that Merchant Capital have come up with, because as Ryan mentioned briefly, and as Dan will talk you through in more detail, we honestly believe that the solution is very well suited to a practice, particularly in the challenging times ahead.
Brilliant. Thank you, Maurice. That was hugely interesting and insightful and succinctly put together with some really fascinating data and some slides. So I'm sure there will be some good conversations and questions coming out of the data that was presented. So thank you very much. It's always inspiring to hear you talk. So I'm going to just quickly talk about Merchant Capital and how we got to this product, and then I'm going to hand over to my partner Daniel, who's going to give some more detailed information on Well by Merchant Capital and the product process. So just very quickly, Merchant Capital was started 7 years ago. It's a fintech lending business, and the founding principle really was to provide easy, frictionless working capital to small and medium-sized businesses in South Africa to help them prosper and grow. The funds that we deploy are traditionally used for additive purposes, so for growth purposes, not as a funder of last resort or for destitute business owners. They typically are used for business enhancing activities, such as opening up new stores or buying incremental stock or buying some new equipment or refurbishing, etc. We have deployed now close on 2 billion rand off our own balance sheet. We've assisted 10,000 small and medium-sized businesses across a very diversified portfolio. And frankly speaking, we have always wanted to develop a product for the medical space. The founding principle, as I mentioned earlier, is a product that really takes the cash flow of the business owner at stake into consideration. And the product that we have been successfully deploying into the South African SME market for the past 7 years has been a product whereby the repayments fluctuate directly in line with how the business owner trades. So a business owner has a good week or a good month, they pay more towards their Merchant Capital cash advance. They have a slower week or month and they pay less. Now, I don't think anybody in their wildest dreams would have expected how the foundation of that product would have been tested in this COVID pandemic, in this 1 in 100 year pandemic that we found ourselves in. But never more so has the product that we've launched been more relevant, because in the weeks and months, and some businesses has been a multitude of months where businesses have been shut in the various lockdown levels, they haven't been repaying anything towards their Merchant Capital cash advance, and they haven't been penalized for that. So all that has happened invariably is that the term of the loan has been extended, but the cost of the product has remained fixed. And that's really the founding principle, and I guess the innovation when compared to a traditional bank loan, where you've got a fixed debit order coming off your account at the end of the month, irrespective of the turnover that you're doing. So essentially what we wanted to do was create this product with the same fundamental principles of call it as a repay as you trade, and apply that into different verticals. And the medical space is one that I alluded to earlier that excited us and we thought we could add value. But I guess COVID and the pandemic has been the catalyst, and we can categorically say that if it wasn't for the COVID pandemic, we probably wouldn't have had this opportunity. And as I think, as Dr. Ryan Noach alluded to in his intro, we kind of got to Discovery Health through some serendipitous events. We have partnered up with Discovery Insure, where we provide an innovative SME lending product to their insurance businesses. And that kind of led us to have some conversations with the Discovery Health team, and as they say, the rest is history. And within 5 to 6 weeks, we managed to curate a product, build the technology, build the credit scorecards, and launch the product, which we launched on a soft basis about a week ago. So that's really the synopsis that I wanted to give around Merchant Capital. Well by Merchant Capital is a tailor-made product specifically for the medical practitioners. And I'm going to hand over to my partner, Daniel, to talk the audience through some slides and some processes and application questions that hopefully he can answer. Over to you, Dan.
Thank you, Dov. Thanks, Dov. So before we take you through the process and how the application process works, I wanted to just spend a few minutes articulating how the Well product is constructed and what differentiates this product from other options or traditional products that are available to medical professionals. Now, the two big product differences are, number one, it is, as Dov explained, our philosophy and the way our business works is that we create a product whereby businesses can repay based on the fluctuations in their turnover. So we wanted to adapt this to the medical space, and basically using the claims data that we are able to receive through the alliance with Discovery Health, with doctors' permission, we are able to adjust the repayments based on the claims. I'm going to give you a little bit more detail how that works technically, but for now, just philosophically, that is a big differentiator. And then coupled with that, the administration process is very, very different. So using the data that Discovery shares through the collaboration with the doctor's permission, we are able to pre-approve doctors that opt in for the facility. In that way, there is absolutely no administration, in the sense that there's no application forms, there's no need for financial statements, there's no need for bank statements or details of how the practice works. We obtain all that data directly from Discovery Health. And through that process, we are able to actually submit to the doctors a pre-approved offer with no T's and C's and no conditions. Furthermore, that doctor can customize how they wish to take their product, what term, what amount, and what repayment they are comfortable to use towards that facility. With them, the way that the pricing works is, and this is a question that has come up at a number of other forums, is that the pricing is done as a fixed rate. So when the application or the deal is offered to the doctor, an estimated term is calculated. Now, based on that estimated term, we will charge a fixed fee. That fixed fee is approximately 1% a month on the anticipated term. However, in the event that the term takes longer, there is no additional cost incurred. I think to illustrate this effectively, it's always best shown by way of an example. For example, in an event that we were to have a doctor that applied that had an average claims history with Discovery of 100,000 Rand a month, consistently month on month, assuming the facility approved would be 150,000. Now, for simple maths, assume the doctor only elected to draw 100,000 Rand of that facility. The total repayment would be fixed at 112,000 Rand on the assumption that they chose to repay it over a 12-month period. If they chose to repay it over an estimated period of 6 months, the repayment would only be 106. If they chose to be a payment period of 18 months, it would be 180. Now, when we say repayment period, it's important to emphasize that that's an anticipated repayment period. So that is our best estimate of how long it should take the doctor to repay the facility, assuming all things equal, nothing changes from the prior 36-month average. which is what we use to base the offers. Now, in the event that, say, this product was in existence pre-COVID, and we gave a doctor this facility and we anticipated it to take 12 months, and COVID hit and their practice did not trade for 3 or 4 months, and it landed up taking 18 months to repay, the total repayment would still be fixed at 112,000 Rand. So going back to the example, on that first example, whereby if a doctor were to have taken 100,000 Rand, they agreed to pay 112,000 Rand, and their average turnover was 100,000 Rand. In the event, and we would then select 10% as a repayment, which would be taken off their claims every month. Now, when we say taken off claims, we would not interrupt in any way with how the claims process works with Discovery Health. The doctor would still receive 100% of their claims, and a debit order would be struck on the doctor's account, calculated at the agreed percentage multiplied by their claims. So on this example, if it was 100,000 Rands worth of claims during a particular month, we would take 100,000 Rand multiplied by 10%, and 10,000 Rand would be the deemed installment. On some examples, say the doctor were to go and close their practice over the December period, if they were to go on holiday as an example, and the claims would to only be 50,000, we would only have a repayment of 5,000 Rand. On the same example, if it even went down to as much as 0, if they were to not be able to work for whatever reason, and they were to not trade during that particular month, the repayment would be whatever they traded, being at 0, at 10%, which would still be 0. And the 12,000 Rand fee would never change. So that is the risk that Merchant Capital would take. Now, it's also important to note that, as Dr. Ryan Noach explained at the beginning, this is a totally unsecured product. So we don't need security, we don't need collateral, and that enables us to give you access to the working capital immediately. So there's no need for us to obtain security, and that creates a much more frictionless process. So coupled with, to sum it all up, it's a very, very light admin process. We're very mindful that doctors are very time poor. They've got a lot going on at the moment and in general, and therefore we've created the product that almost no admin is required. And also there's the security that it's a pay as you claim. So if you can't claim for whatever reason, you don't have to have the burden of an installment, and you won't pay for that. So some payment holidays that have been offered during this COVID period have still had interest bearing on their accounts that accrue. On the Merchant Capital Well product, there'll be no penalty interest whatsoever if your term is extended. I'm now going to take you through the actual process flow, and please just jump in with any questions once I'm done. So the first step of the process would be that the healthcare professional would log on to their Discovery Health ID. Please note that this is only the website application, not on the app. So you would only have access to the Merchant Capital offer on the web portal. You would simply log into your Health ID. Yeah. Once inside the Health ID, you'll see that there's a couple of different options, and you'll see Well by Merchant Capital. You would simply need to click on the Well by Merchant Capital offering. There you will see that it will demonstrate which of your practices, it may be more than one, if you have more than one practice registered with Discovery Health, are eligible for this product. Bear in mind that each practice is approved for its own facility based on that individualized or specific claims history. Thus, you can claim for multiple practices. In the event that you are part of a multi-partnership practice, there are two options. Either you can take a facility on behalf of the practice, and you would need all partners to consent, and then on that basis, that would be signed, and the facility could be shared amongst all the partners. As a second option, you could simply just email well@merchantcapital.co.za and explain the scenario, and we will take you through a parallel process whereby we will be able to give you an individual facility that would not necessarily be tying in the rest of your partners, but the repayment would still be based on your proportionate share of the claims of that practice. If it is a single owner practice, then it's quite simply, you would simply choose your practice, and then you would only be the only person required to sign for that facility. Once clicking on the Well by Merchant Capital, and you've selected your practice, all of your information will be pre-populated based on the information that Discovery Health has on file. Please check the information and just confirm that we have the most up-to-date information and make any edits that you deem necessary. Once that is done, you just click onto the next screen. After this, you will simply get an email. So what happens in the background, once you have given us permission for Discovery to share your claims data, we'll work our credit scorecard and we would approve you for your facility. Now this, as I was explaining earlier, this approval is a full and final approval. There's no T's and C's, there's no conditions. You would then get an email to indicate that you have been approved, and you would then need to click on the link to log in to customize your offer. Once inside the portal, you would then be illustrated with what is the maximum facility that you've been approved for through Well by Merchant Capital. And there are two levers that you are able to play with to choose the facility that best suits your practice's needs. Number one, you would select the facility that you require. So you would be able to select up to a maximum approved level, and you are able to select anything from a minimum of 10,000 Rand. So anywhere from 10,000 Rand to your maximum. And then the corresponding lever that you would pull is what percentage are you comfortable being allocated of your claims to be used to calculate the installment. So you can, and basically what would be the resulting thing would be that the fee or the cost of the product would be calculated by a combination of these two levers. So based on, so what the system is going to do in the background is it's going to say, right, how much would the doctor require and what is their percentage? In the background, it will quickly calculate the anticipated period, and then it would apply the fee based on that anticipated period, and it would show that to you. Bear in mind that fee is fixed up front, as I was explaining earlier, even if it takes you longer. It's also important to note that in the event that you choose to settle early and a doctor comes into a lump sum and they choose to settle early, there would be an early settlement discount that would be applied. So once the doctor has finalized and selected their optimal offering, which is, and you can do it as many times as you want to try and ascertain what can you afford from a total cost, what can you afford from an installment or an estimated installment, and the system will allow you to do it as much as you want. It's also important to note that because the cost is taken in for your practice, it's fully tax deductible because it's incurred in the production of income. So as long as you are using this loan for your practice in some shape or form, it is going to be fully tax deductible. So in the event that your fee was 12,000 Rand and you are a sole prop with a marginal tax rate of 45%, 45% of that would effectively be tax deductible, as you would deduct the fees off your taxable income for the practice. Once you have finalized the process of selecting your offering, we would show you what you have selected, how much it's going to cost you, and what the estimated repayment per month is going to be. Select that you are comfortable with what you have chosen, and then we will just have some information that we have on file that we'll need you to confirm before your contract is generated. It's important, please check banking details, as some doctors have their claims paid into a bureau, as an example. The banking details is the details where the claims are paid, and we want to just make sure that the banking details that we have, which is the bank account into which your funds are going to be dispersed, is the bank where you want it to be dispersed. So Please check that carefully and any other information to be used to populate your contract. Or once you have clicked on these few screens, and it's one page, it's quite fast, and an e-contract will be submitted to you via email. You can log into this contract, you can peruse it, and you simply sign it using a digital application. So it's a couple of clicks on the mouse, and the contract is signed, and you will be given your own copy of the contract via email. And as simple as that, the funds are then dispersed into your bank account within 24 hours. And that is the process. I think I'm just going to hand over to Dov, and we are going to go into Q&A for any questions that anybody has.
Thank you, Daniel. That was great. So I've seen a number of questions coming through, and what I'm going to try and do is consolidate them, and just try and pick up the major themes. So one that is coming through quite strongly here, and I'm going to just use Kenneth's question because it kind of covers 2 or 3 or 4 of other questions. It says, Kenneth says, sounds like an innovative product that can truly assist practices. Any hope to collaborate with other medical funders to glean claim histories from them with the consent of the practitioner? So Daniel or Maurice, I think you probably will both be well placed to answer that. But Daniel, maybe over to you just to speak a little bit broadly about some of the application or qualification criteria.
Absolutely. So thanks, Dorf. So that's a great question. So Discovery Health is the only medical scheme that we are currently offering this product through. There's no other conversations with any other medical schemes at this stage, and there's no plans, no immediate plans at this stage. The discovery process simply uses the claims, and it gives doctors that use discovery claims the ability to have the quick process and the pay in line with their claims history. But it doesn't mean that a doctor who has a much lower portion of discovery claims, as an example, would not be eligible. So what we will do is, in the event that, and the lines between merchant capital and discovery, what Discovery wanted to achieve through this alliance is to help all medical professionals, irrespective of what portion of their claims are coming through which scheme. Thus, when in the event that we have a doctor that has a large portion of claims coming through another scheme, they would simply need to alert us to this fact, submit us with proof of that data, and we would provide them with a facility. They would have the same facility, the same pricing, the same benefits, but they would just simply need to give us through that data. And then what we would do is we would use the discovery claims going forward as a proxy to calculate what their repayment is. So our data shows us that the discovery, if we use discovery claims as a proxy, and irrespective of what percentage discovery is, it should be an indication of what the trend is of other claims. And we would then calculate the debit order based on discovery. And if there's a material difference, the doctor can simply email us and show us the actual claims across the board, and we would adjust it accordingly and offer a refund on the debit order if they can demonstrate that their total claims were less. And that is only in the event, though, that they opt in for a facility or a higher facility based on other medical scheme claims history.
That's great. Thank you, Dan. There's a question here that is an easy answer, so I'm just going to quickly answer it. It says,
Maurice, sorry to interrupt.
No problem.
Just from our perspective, as Ryan stressed at the beginning, Discovery has no vested interest in this product. We're simply looking for ways to help doctors. So if in fact there are other integration opportunities or whatever with other medical aids, other funders, we'd have no problem with that happening going ahead. It just so happens, we've worked with Merchant Capital to initiate the process, but from our perspective, the easier and better it is for more health practitioners to access this, the better.
Great, Maurice. Yeah, I think that's an extremely relevant point. Thank you for clearing that up. So the question that I wanted to answer very quickly, it says, if a practice was making a strong turnover, could one utilize well by Merchant Capital to grow the business, or would one need to look more into the other services offered by Merchant Capital? So I think the short answer there is absolutely. They would be a perfect candidate for the well product. This product, was designed to kind of cater for the short-term, call it financial pain that the medical professionals are feeling, but then in the medium to long term as a growth product. And we've already had doctors coming to us that are using the well product, for example, to buy equipment that is arriving next year. So absolutely, that the product would be well suited for that growth opportunity that question was asking about. And then Daniel, I'm going to give you two questions here. I think you can answer them both quite simply. So the first one is, will the product be available to dietitians as well? And then there was a question around whether or not it is compulsory if credit life insurance has to be taken out on a facility. So maybe you can just cover those two answers very quickly.
Thanks, Dov. Before I answer those two questions, I'm just going to add one extra point onto the last question that you answered, and that is to say that this product is, although COVID was the catalyst to create this product, we have created this product with a long-term view in mind, and it's a long-term product that is here to stay. So it's not a short-term product that's going to disappear once the pandemic disappears. We are hoping to help healthcare professionals long-term going forward. So this can be used for growth at any point in time into the future. Just to answer those other two quick questions, can a dietitian be eligible? Absolutely. All allied health workers, any healthcare professional that is registered with Discovery Health and that has a claims history would be eligible for this product. And on the credit life side, at this stage, there is no mandatory need for credit life. The reason we've gone that route is that we wanted to keep the administration as quick and simple as possible for launch. And as the product matures, we may look at it, but no plans for the next 12 months.
Great, thank you, Dan. Then a question, and sorry, you seem to be in the hot seat, so I'm going to continue sending the questions to you. The question from Bert, which is two questions but asking the same thing, is can we apply now and only draw capital later if the need arises? And also, can we draw the capital in increments rather than the total amount up front?
Great, thanks, Rob. So to answer the first question, we base the offer on the last 36 months worth of claims history. So your offer that you would get today would be valid for 30 days. And then if you don't use it within 30 days, you would need to apply again, and you would still be eligible for an offer, but it might be at a slightly different amount if your claims history over that 36-month period had changed. So there may be some changes to the offer, but if there's been no material change to your credit profile, then the product would still be available, and there'd be a very small or immaterial difference in the quantum that is being offered. And then in terms of the second question, to take out, assuming you are approved for a larger amount and you only wish to take a portion and then carry on drawing, that is on our tech development project plan. We are hoping to have that piece launched in the next month. So because we built this quite fast with Discovery Health in just under 6 weeks to launch, we wanted to get the essential parts ready first. So for the next month or so, you would not be able to immediately draw down the balance, but that will be, as I say, before the end of the year, that part and that accessibility will be available. And long term, you'll be able to draw as much as you want and simply log in and top it up as and when you need to.
Great, Dan. We're running out of time, so I want to literally just ask one final question before we log off, and this I'm sure could be answered by Dr. Maurice Goodman or yourself. The question is from Elvin to say, can Merchant Capital collaborate with the KZN DHC or the SAMCC to draw other schemes into an alliance with Merchant Capital?
So Dan, maybe let me have a first go at that, Shane. You've been in the hot seat all the time. Just to say, from our perspective, absolutely. In fact, Professor Morgan Chetty and other leaders of the RPA groups have worked closely. We introduced Daniel to Prof. Chetty and to others, and they're very closely involved. And as I said, there's no ownership here from Discovery's perspective. So if Merchant Capital can work with SAMCC, etc., and other RPAs, and do whatever's necessary to make this as easy to access as possible.
Great, thank you, Maurice. Dan, I'm not sure if you want to just add anything to that in closing, or is that sufficient?
Thanks. So I think Maurice covered it. I think that the only thing I'd like to add is that we have been communicating with a number of associations, medical associations, and we've been talking to a number of different people. So because of how new this product is, and there's still a lot to understand, there's a lot of questions, and I'm sure a lot of questions have not been answered during this short 1 hour. And we as Merchant Capital are just putting up our hands to say we are available. If any association or any clinic or any partnership or any grouping needs any further information, please reach out to the well@merchantcapital.co.za, or you can reach out to your relationship person at Discovery Health, and we'll set up a session whereby we can give you a customized answer to any of your questions. I understand, although the digital process is really smart and quick, some people still need somebody to talk to and ask questions. So that's still available. Simply reply to the email that's come to you from well@Merchant Capital, or reach out to DH and they will put us in touch with you.
Great, thank you, Dan. So I'm cognizant of everybody's time. We've gone over by a minute or two. I know there's 1 or 2 or maybe 5 or 6 questions that we haven't gotten to. So my team will endeavor to get back to every single one of those questions, and we will respond to you guys in the next 24 hours. But yeah, it's been an absolute pleasure hosting this webinar. Thank you to Dr. Maurice Goodman and Dr. Ryan Noach and Daniel Moritz for your insight and hopefully a great engagement. And we as Merchant Capital are extremely excited about this product offering. We had to get it to market relatively quickly, and just watch this space for new product refinements as we get better and slicker and understand the medical professionals' requirements better. We will keep on innovating, or iterating, I should say, with new and better product refinements. So guys, thank you very much for your time. It's been great to host the webinar, and enjoy the rest of your evening. Thank you.